from... Okay, before we go across to Ashwini, the United Spirits conference call has just started. Let's quickly cut across.
Underscore something that I have underscored in the past, that we do not manage this business purely on a quarter-to-quarter basis. We manage this on a slightly longer-term basis, which is at least 1 year at a time. Now, as you would have seen from our results, we have continued to grow the top line despite this environment with a 3% net sales growth in the third quarter and an overall growth of 6% in the 9 months year to date. Although we have been impacted by the effects of demonetization, we believe that we have managed through this period better than what we initially thought we'd be able to do. The results, I think, in some ways also demonstrate that we have the right strategy in place, and our big focus on premiumization, coupled with selective participation in the popular segment, I think this strategy seems to have worked for us, particularly during this difficult period. Specifically, in this period, our Prestige and Above business, which is really number one whiskey and above, grew 12% net sales in the quarter and 16% in the 9-month period. And this has been hugely enabled by our renovation strategy as well as our premiumization strategy. The Prestige and Above segment now represents almost 60% of the overall business. So we've made huge progress in making Prestige and Above a much richer part of our total business. And this has been enabled, like I said, by renovation, but also some new introductions, which I will touch upon. At the heart of Prestige and Above is McDowell's number one whiskey. We renovated the core variant about a year ago, and it's the biggest brand really in our family, and it grew at 19%. So the core variant of McDowell's number one whiskey grew at 19%. In the past quarters, I had mentioned the relaunch of Signature, and I must say I'm very pleased to see that Signature has grown 50% this quarter and almost 30% in the 9 months so far. In terms of new introductions in the Prestige and Above segment, we've introduced McDowell's number one Silk, which is the first Indian whiskey with a honey flavor, Royal Challenge Bolt, which is an espresso-based Royal Challenge whiskey. We've introduced Captain Morgan Dark Rum into West Bengal. And during the festive period, we introduced gift packs for some of our premium brands, which include Royal Challenge, Black Dog Whiskey, Black and White Whiskey, and VAT 69. And I must say I'm very pleased with the ability of consumers to pay a premium for a highly giftable pack. From a competitive standpoint, in the last quarter, I had mentioned that we had grown faster than the category and grown share. Given how we performed this quarter, I'm actually quite confident that we would have again grown faster than the category and grown market share. If you move from Prestige and Above to Popular, Popular in our priority states have actually grown by 6% in this 9-month period. So, and finally, we had shared with you earlier that we were looking at franchising out part of our Popular business, particularly in states where we believe we don't see a great opportunity for growth in the future and opportunities for profitability. And I'm happy to report that we have started progressing franchise agreements, and many of these will be effective from Jan 2017. In addition to growing our top line, we have continued to focus on improving margins, and that has been driven through premiumization as well as productivity combined with pricing, which we have managed to get in certain select states. As a result of this, our gross margin has improved by about 150 basis points in the 9-month period. Now, I must add that inflation has been somewhat subdued in the period, but more recently we have seen some firming of input costs, particularly towards the end of the quarter on ENA. Overall, input cost inflation has remained around the 2 to 3% mark over the 9 months, which we have largely mitigated through our cost-saving initiatives. Importantly, during this period, we have continued to do what we believe is right for the future of this business, which is to make investments in our organization, in brands, and our investment behind core brands is up 16%, as well as investing in new capabilities, as well as internal systems and processes. So as we are taking this business forward, we continue to invest now so as to shape this business and make it ready for the future. At an EBITDA level, we have improved margins of the quarter with reported 11.8%, enabled by improved gross margins and lower staff costs. Our underlying EBITDA is 11.6% in the 9-month period, and really it's in line with the expectations we have for the business. This includes increased investment behind our brands of about 60 basis points. We have also continued to focus on the business below EBITDA, both in terms of reducing debt as well as reducing interest costs.
Okay, that's the word from the United Spirits management, and it just goes to show that demonetization or no demonetization, nothing can keep a man away